Hello traders, hello everyone. Welcome to a new Elliott Wave live session. It's Monday, March 27th. So, how are you doing, everyone? Is voice fine? If you're watching this on YouTube, please confirm if you can hear me well. If you're watching this on TradingView, hello there. Okay, Mosu, thanks. So it looks like that voice is okay. Okay, perfect. Sound is perfect. Okay. Okay. So we have seen stock markets, it stabilized a little bit on Friday. So looks like that we have some positive sentiment after First Citizens bought the Silicon Valley Bank. So maybe that's the positive news that they are trying to stabilize our markets for a bit. And then you have obviously um, somehow still speculations that central banks are done with their hiking cycles. So this is also obviously positive for stocks. However, what I see is that markets are not in that normal correlations like before, and that's usually the case when you have these central banks monetary policy decisions, when you have geopolitical issues, when you have this bank crisis. Of course, in uncertain times, markets will react differently, and obviously what we are seeing is probably the most clear direction of everything is most likely still visible on metals. So looking before we go to metals, gold, and other markets, I want to start today's sessions with the euro dollar. Now, if you recall last time when I talked about the euro dollar, we've been looking for this potential corrective recovery here to be a wave B. I said that 61.8 to 78.6% is a key resistance, and back then, of course, the US dollar was on a back foot because there was actually a speculations because of that bank crisis that actually Fed will be forced maybe to stop the hiking cycle. Okay, but now when the Fed is behind, now this focus obviously has changed, has shifted towards the ECB, and now there are speculations that ECB could potentially could slow down the hawkish look. So if that's the case, obviously we know that the euro dollar could potentially see more weakness. And so far, we have seen a very interesting move to the downside. I definitely realize that maybe with a different wave count, there can be also completed correction at March lows. But what is really important at this stage is that you have an impulsive reaction lower. So even if this is still only wave A of some temporary corrective weakness, and we are then later on will be headed higher, I still think there is room for more downside. There's this 50 period moving average, sorry, it's 100 on the 4-hour time frame. So maybe we will retest this one, meaning that I'm expecting 107, 106 levels still to be tested. Looking at the intraday chart here, that's potentially 5 waves down, and you are now maybe in this already, who knows, in a wave C that can be headed back into this resistance around 108, 108.50 area. That's potentially short-term resistance. So even if this pullback again from that 109.28 high is going to be just corrective, I still think that there is room for more downside. Okay, so for now, I still will stick with this potential wave C targets at 104 level, which in my opinion could be ideal zone for a bounce on the euro dollar. So short term, I'm bearish on the euro dollar. Longer term, I'm still bullish on the euro dollar, and this hasn't changed. But sometimes these corrections can be very challenging when they are going to complete itself. Okay, but if this at some point, if this current pullback, current drop from 109.30 will give us enough of evidences that this is a corrective look, corrective wave rather than ongoing weakness for a wave C, then I will immediately shift to the bullish count. And since I mentioned the bullish count, here is this one, where I said that potentially we maybe already accomplished this corrective setback at mid-March and we are headed straight to the upside. But again, even if you think that we are in a sub wave 2 of this new 5-wave bullish cycle, again, you would expect that this wave 2 will be made by minor 3 waves, right? ABC structure. So I think that maybe today, tomorrow, we could potentially see some resistance on the euro dollar, and then another leg to the downside towards 107, 106 level, where big decisions will be made. Okay. Why I'm looking for my primary wave count still to be potentially lower for a wave C is also coming from the dollar index, because notice that this drop here is still clearly in 3 waves. We failed to break this lower trend line. So we either are going to see more gains if this upper trend line is going to be broken, or we will just chopping around and maybe even form some kind of a triangle. But so far, I do not see this as a bearish impulsive characteristics. It looks like that we are more in a neutral phase, which somehow could make sense because that stocks and dollar lower stocks did not really provide any kind of a strong support for the US dollar, and that's obviously because of the US yields, which also came to the downside. So until the markets will find their correlations back, I think that it will be a little bit more challenging. But as I said, in the short term, I think that the euro dollar, at least on this hourly chart, is read this wave count. I think that there can be more weakness coming after this rally. Okay. Now, also the important will be to watch the Euro Flash CPI figures. I think this one is I think it's on Wednesday. I don't have a calendar right now here. So we have a few inflation data, of course, this week again, which will be important. So we have Euroflash inflation, and then we have also PCE index from the US, which measures the spending, obviously. So you have actually the CPI that measures prices, and then you have spending. So obviously, if this spending will come to the downside, will come lower, then of course this somehow could be going into the positive direction that inflation is really going to slowing down. Okay. Now let's take a look also, and not only that, we have Aussie CPI as well. We will take a look on Aussie a little bit later. Now let's take a look also on cable here. So on cable, you know that we've been tracking this count for a while. It's still doing very well, actually. I think that we completed this flat correction down here at this wave A support. More importantly, we came very nicely to the upside here, making impressive break above that upper trend line. So I think that we are in a bullish sequence, but nothing moves in straight line. And this wedge, potentially even a leading diagonal for wave 1 or wave A, suggests more upside. But after wave B, wave 2 pullback, the support obviously could be at these previous swing highs, because it was quite impressive broken resistance here, firstly at 120.70 and then at 121.40. So definitely around this 38.2%. That's a really nice confluence here. It's clearly an interesting support for a next leg to the upside. So even this one, despite the bullish view, in the short term, we either just will be chopping around or maybe even see a sharp deep correction. Now, sometimes, obviously, corrections can be more sideways rather than deep. It really depends what kind of substructures the market will form. But we know different type of corrections, and we just have to be patient and wait for them to unfold until we can say that they are coming to an end. But so far, I still think that we are in the mid process of this corrective wave 2 or wave B pullback. So cable, I really like cable in general, because we completed this flat correction. I will be looking for a break to new highs of the year in the next few months. Okay. Now let's take a look on Aussie. Since I mentioned it earlier, so we have the inflation data. Bank of Australia, they mentioned actually that they are on a potential hold this their hiking cycle, and now you have this bank crisis, which means that actually they can really stop the hiking cycle if especially if inflation maybe will also slow down. So I don't believe that they will be have any kind of a hawkish look. So there's a risk actually that Aussie will come a little bit lower. So I have prepared two wave counts for the Aussie. Now the first one is a little bit tricky, I would say. Yes, we broke this trend line, but notice that we have here an extended potential wave C. Now, extended wave C, yes, they are not that rare, okay, but still you have to be very careful trading against them, especially if you don't have an overlap with wave A. So as long as we are trading below 68.60, I would be very careful here buying Aussie. Of course, this could be a leading diagonal, but it's not really clear to me. It's also some interesting, very strong sell-off for a wave 2, but still, I mean, it's possible, but I'm not really sure that I would take a risk here. Also, Aussie somehow lost the correlation with stocks, with gold as well. So I think that it's good to be a little bit more careful here with this one until the things get a little bit more clearer. So with that being said, I also prepared another wave count here, which just from a pure Elliott wave perspective looks very clear. Okay, so you have wave 1, wave 2, extended wave 3 rather than wave C that I showed on the earlier wave count. Okay, and now you have this wave 4 possibly finished with a triangle in subwave B here, and you have this broken trend line. So again, this looks very clear, and I would be looking for shorts on this one if the correlations would be in place. Okay, if we would, let's say, have bearish gold, if we would have bearish stocks, then I would probably be looking for this one to be on my primary list for shorts. But as I said earlier, correlations are not really clear, so I'm watching this both wave counts and watching the Aussie a little bit from a distance, and curious to see what will happen after this inflation data. And also, a big picture is nothing really has changed. I mean, we are in a wave 2, either a sharp wave 2 or will turn out to be a little bit more complex. But as long as we are holding these October levels, I think that there will be still time for this Aussie to rise, maybe towards the end of the year or in the second half. Now, let's take a look on dollar yen. So, as you know, dollar yen and yen crosses in general, we have seen some very extended moves, and it looks like that some profit taking and data from Japan, inflation in Japan, as you know, came down big from 4.3 to 3.3%. Okay, that's a huge move. So I think that if we consider that we have had some very nice extended yen strength, and that we have now this inflation slowing down a bit, maybe there is a time also that speculators will not be buying Japanese yen that aggressively. Also, Japanese yen is known as run to safety as well, but with stock stabilizing, we have another reason why potentially we could be seeing a corrective rally. So if you look on dollar yen here, just maybe some short-term look, you have potentially wave 2 going on. So that was a leading diagonal. We've been tracking this, starting tracking by the end of at the end of last week. So so far we bottomed, it appears, at the lower side of this wedge. We are now trying to break the upper side. So again, there can be some dollar strength coming. Okay, but again, only temporary, could be, but still, I mean, there is room for 134, maybe even 135 resistance, right? Okay, so if dollar yen is headed to the upside, or maybe just temporary corrective pause here, which after all would make sense after this extended move, then also yen crosses could see recovery. If we look at CAD yen, since we've been tracking this one for actually since start of the year, we almost mentioned and covered it in each webinar, and as you know, we've been looking for this reversal, push or fall to the downside into wave 5 after a perfect textbooks rally into wave 4. resistance. So we stopped at this, where you have it here, at this 38.2%, where we also had wave 4 equal to wave 2 in that area. It was 100 resistance area as well. So we have seen a very nice move to the downside. And now when we broke, and not only broke, but only have seen a spike to a new low, we should be careful. With dollar yen making that wedge, okay, with stocks stabilizing, with inflation in Japan coming down big, I think that, as I said earlier, there is a chance that these yen crosses could potentially be ready for a higher degree correction. Okay. Also, looking at this price action here, again, notice this clearly should be, you should see this as a failure breakdown. And then if you look more into detail, you can see that this, that this was a very strong drop, but then later we have seen some overlapping price action, right? So this clearly, this definitely defines the slower bearish momentum compared to the first leg or reversal from the high. So when you see this type of a price action, especially with the failure break here, you really should be aware of potentially higher degree reversal. Okay, so far this looks like an impulsive reaction from the low as well. So I think that after the next pullback, we will see potentially more weakness. Of course, I'm not calling any major bounce back towards 100 area, but I think that we could see 97, maybe even 98 in the next 2 weeks or so. Okay, so not only that we have, as I said, this inflation turning around in Japan. You have also, since I'm talking about CAD yen, you have also crude oil moving into the support. So if you have also crude oil moving into the support, this could be positive for CAD as well. Okay, so we have trends on those yen pairs coming to an end, and then you have, for supportive outlook on a bullish side of CAD yen, you have this crude oil coming into the support. So if you look at crude oil, you can actually see that we came to the downside out of this triangle. Okay, we covered this triangle again plenty of times, and notice what happened here in this May contract. We have seen this lag equal to wave B. So after the breakout, we have usually two triangle measurement projections. Okay, the first one is always from end of a wave E, meaning that that's the first minimum target for a fifth wave, and then you have the second target from a breakout point, which is obviously a broken trend line, or if you want, a wave D broken swing low as well. Okay, so because market has bottomed here and now trying to reverse and even retesting the previous swing lows, I think that there is actually a chance that this one can be bottoming here. Okay, if we can break 71.70 in the next 2 days, I think that crude oil is ready for a higher degree correction. Also, from psychological perspective, you have to realize that everyone, not everyone, but a lot of speculators were trying to catch the move within this triangle range, right? Either they was ready to play the breakout on the long side or to the downside, or they were just always caught on the wrong side within this triangle measurement, within this triangle pattern. And normally when this triangle is finished, when breakout occurs, that's when they see the next direction going on. And that's when everyone tried to join this current breakdown. But usually that's too late, okay? And we know that in Elliott wave terms, after a triangle, you will see the final leg within the higher degree sequence. And usually that's wave 5, because this cannot be wave 2, because triangle never occurs in a wave 2. So I, again, think that we are here approaching some serious supports. And we've been calling for this breakdown here to complete the higher degree 5-wave drop, which could even be some kind of a wedge here. But also, if you look here back to mid 2021, December 2021 levels, clearly we are approaching some very interesting support. So that's one thing. And now, if you look here on the hourly chart, okay, you can clearly see that potentially we have 5 waves up from the lows. And always when you have 5 waves from the lows, okay, or from the highs, 5-wave drop from the highs, you should be aware that maybe something is changing. Okay, I was looking for this to be potential corrective wave 4 rally, but because of that bounce from that triangle measurement target and that 5 waves up here, I changed my views, and I was considering potentially bullish reversal here. I still think that, of course, there are some alternate accounts which suggest that maybe this was let me hide this, that maybe this was some kind of a flat correction that we will continue to the downside. But what happened recently is this drop unfolded in 3 waves, right? You also have a minor broken channel here. So I think that this is probably the most important indication why the crude oil could be headed higher, because after first sell-off here into the third leg of decline, market was able to stop at a 61.8% and even rally on Friday. Okay, and closed quite well here around 69, if not higher. So I think that there is room for more upside. We don't know, and I don't want to predict too far here into the future, obviously, because we never know if this is going to be a wave C or maybe even some kind of a wave 3. But in both cases, I think that there is room for 74, maybe even by the end of this week. And if we see this level, then of course we know, as I said earlier, this could be positive not only for CAD, also for NOK, also for Mexican peso, right? So keep an eye on these currencies as well. Okay. Now let's take a look also on let me check if we have any questions. Aussie and Kiwi views. Actually, we covered Aussie a little bit earlier, so if you watch the recording, Stalin, then please do so. Since you mentioned Kiwi, let's take a look. We tried Kiwi longs last week. Then we trailed stops higher when the market was retesting the highs here. But now it looks like it's not ready to resume its upward direction yet. I'm observing potential flat correction here with support around 61.37. But again, because of unclear situation, I would be very careful here. I would not be buying it. Okay. It would be probably a different story if this level 61.37 would hold and you see immediate, let's say like a 5-wave minor bullish impulse on a smaller time frame. Then maybe you could consider buying pullbacks. But I just realized that maybe this rise from March 08 to March highs could even be a correction, okay? And that's going to be a wave B, and you will see a retest of the lows. So it's a bit tricky at this stage, okay? But longer term, still, I think that later this year, we will be trading higher. It's just very challenging at this time, at this point, to say if correction has already finished or no. Okay, so short term, it's a little bit tricky to play on the long side because we don't have enough of data to say that wave C has bottomed. But if we'll see a bounce from that 61.37, let's say in the risk on environment, obviously, then this could make sense. But for now, it's a little bit tough decision here. So I'm just observing two ideas. Either we see a support 61.37 hold, or if not, watch out for 60 to be a very strong psychological level where we could potentially bottom, of course, with the later on wave C. Okay, it's the alternate view. Now let's what we have here. Let's take a look on the S&P 500. Okay, so on the S&P 500, again, I mean, there's such a fight between bulls and bears, and it's really, I mean, as a trader, you have to consider two potential scenarios, because if you just hide this, I mean, we are just in a neutral phase, right? So don't try to be smart here and say that we go straight to the upside, because in this bank crisis, you know, everything can happen. And I'm still surprised that nothing has dramatically happened yet that would cause a lot of fear. So I'm always open-minded when you have these headlines going on, because you never know what will happen in the next 2 days or few days. Okay, so I'm still open-minded, and I will not say that we are headed back to the all-time highs from here, but I just realized that yes, we are in a corrective wave 4, but I'm not really convinced that wave 4 has ended here, or maybe are we going to see a new retest of the low. So if you're maybe a long-term investor, then of course buying this big retracements, I mean, especially in some of the big names, single stocks, could be very attractive. But for the short term, you will have to be very, very careful here. And I would actually not be surprised if this stock market in general would just be chopping around for a while, because they, on the one hand, you have a very big recession risk, right? Because of this bank credit tightening and higher rates. And on the other hand, you have also speculation that maybe the Fed will stop the hiking cycle. But what I see is that majority is reading this differently. I mean, if someone stops the hiking cycle, that's not actually dovish, right? Dovish is if they will lower the rates, then this would be supportive for the economy because there would be cheaper money. But now, if they just stop the hiking cycle, it doesn't mean that that's bullish for stocks. It can mean that they will potentially just stabilize. It doesn't really mean that stocks will break to the upside. Keep in mind that bank credit tightening is maybe even better for them, like lifting the rates, because bank credit tightening means that conditions to get a loan from a bank will tighten. So it will not be easy to get money, and this obviously their goal is to slow down economic activity, to bring down the inflation. So if the higher rates don't help, well, maybe this bank credit tightening will. Okay, so there is obviously still some ping pong going on here on this market. But since we are covering the Elliott wave analysis, let me look here what we have on the 4-hour. Okay, so here we have potentially ongoing triangle, okay, or maybe flat has completed here. But it's very tough to say that flat completed here because, again, looking at this recovery, it's a very, very tricky one. Okay, and even this drop can be maybe the first leg of some bearish sequence. So it's a very tricky, but still, even if it's a triangle, meaning that upside could be limited, watch out for the 61.8%. Now, the 61.8% is not from a wave C, but in a triangle, you should always take the distance of a wave B when you measure the wave D projections. Okay, so the 61.8%, which comes in interestingly around this March 06 spike. I'm not really, don't remember well what was going on back then, but clearly it looks like an interesting potential resistance. You also have not only this swing high, but also before that you had this swing low here. So clearly this should be a next very important level. It could be retested maybe with this ongoing wave D. So if I label these subwaves here, this could be wave A, wave B, and you are now in a subwave C. And obviously then this first leg was maybe here a leading diagonal, not really, or expanding even, not really the perfect shape, but more importantly, this drop somehow looks to be in 3 waves. So watch out for potential more upside here. But as I said, this level here will be potentially very, very important resistance, especially if this is a triangle, you still are missing wave E. Okay, so that's one interpretation which suggests that we're just chopping around. The other interpretation is a little bit more aggressive and bearish. Okay, here maybe this recovery was completed in 3 waves. That's back, by the way, June contract, and then you have these 5 waves down, and now you're rallying in 3 waves. So again, don't try to be smart to say where the market will go. Just wait what will happen in this area. Okay, will we see a sell-off? Then you know that we are going lower. Will we break significantly above that resistance? Then you know what to look for. But at least in the short term, both wave counts suggest we could recover further, okay, this week. Also, crude oil somehow is looking interesting as well, as I said earlier. Okay, now let's take a look also on DAX. Okay, so German DAX here broke this trend line, so we could be in a new correction going on, because normally when you have a trend line broken connected, that connects waves 2 and wave 4, then obviously this could mean that you are in a higher degree. But since this drop was very strong, very significant, quite sharp, I'm reading this as a wave A of a free wave drop, because even if it's correction, should be made by free waves, right? Normally, but where is this 100? Now, usually when you have this ongoing higher degree pullback, I would expect that price will retrace for at least 38.2%. Also, that's the midpoint of the previous fourth wave here. Okay, so if we are in a higher degree correction, that's the area I want to look for potential support, or even lower here at the end of a wave for around 50%. Looking at the 4-hour time frame, right? Okay, so you have this potential ongoing bearish impulse. I can count this as a 5 waves down, and now you are in a corrective rally. But even if this is, again, just a correction with limited upside, there can be higher resistance retested around 78.6, because this drop unfolded in 3 waves. Okay, so I'm looking for more upside in the short term, let's say this week, and then let's see what happens around this level. I would not be surprised if we again turn to the downside. It could be the perfect ideal timing compared to the S&P 500. Even if there we see a resistance for a triangle, as I said, for a wave D, or even, who knows, wave 2. Hope not. Okay. Okay. Now let me look at some. Let me look at some cryptos here. Okay, so here we have firstly AMD. This one is really interesting. It made an impressive recovery. We've been tracking this one for a while, and so far it looks like that we are in ongoing wave 3, but notice that we are approaching some resistance levels up here, right? So if this resistance really hold and react as a potential top formation here for a wave 3, then we know that the next pullback could potentially also slow down the cryptocurrencies, right? And then you have also here you have this NASDAQ 100 potentially making a leading diagonal, also in a 5th wave. So with this new high that occurred last week, potentially 5 waves up from that lows. So that's very good for bulls, but not yet, okay? Because we know that after 5 waves, market will make corrective setback in 3 waves. So again, we could be potentially moving into the resistance this week. Of course, there's room to retest the upper trend line here. But the idea is that if this market is really going to potentially find the resistance, this could have an impact obviously on cryptos as well, right? Also, if we look here on this FANG index, you have 5 waves up as well. Okay, very nice, perfect textbook scenario. We don't know where the 5th wave will end, okay, but the important is to understand that if you are in a 5th wave, probably you are in a final leg of the first impulse, meaning that optimism obviously is increasing here, and that's the most important evidence where we as Elliott wave traders who are reading the sentiment should be aware and not surprised by the next pullback. Of course, if we get pullback, it will be very interesting to catch the upside at lower prices, but at this stage it's a little bit late to playing on the long side, in my opinion. You just have to be aware that there can be some correction coming here. Of course, maybe not from here. There's still room for 200 points, if not more. Okay, but since I mentioned NASDAQ, if we take a look here, why it's not showing up percent, and I will hide this. Okay, you can clearly see the positive correlation here between AMD and NASDAQ 100, and also I can at the crypto total market cap as well with the NASDAQ 100, you can clearly see the positive correlation. So again, that's why I'm saying if this technology is really going to find the resistance, let's say in the next week, 2 weeks, then just be aware that even crypto market could potentially make some pullback. Looking at just like a simple perspective here, we so far on the total market cap, we are holding this resistance. We are holding this resistance when look back here from August of last year. Okay, so definitely that's a very important level, and even you can count potentially 5 waves up here as well. So I know that we are now consolidating, could be quite interesting week, but as long as we are trading below that level, just be careful here in cryptos, in my opinion, on the long side, right? Okay, let me check if I have anything else here. Okay, I think that's it, what I have on the list. So traders, I hope that you enjoyed this presentation. If you have any questions, anything, please let me know in the commentary below this recording. I will make sure, or in the chat, I will make sure to answer your questions. And please join me next time, next Monday. I will be happy to cover some of the updates for you. Have a good day. Bye.